Welcome to Module 6 of the QuickBooks Accounting Software training. In this Module 6, we're going to look at transaction posting with a focus on the revenues. My name is Lillian Katiso. I'm a financial management consultant and QuickBooks trainer. In Module 6, we're going to look at making cash sales. That's the most straightforward thing to do. You're selling cash, and there's, of course, no debt that has to be tracked. We're also going to look at when someone asks you for a quotation, how do you go about raising quotations? And also we're going to look at how to create invoices, how to receive payments against those invoices, and how to make deposits. Okay. As usual, I'm going to share my QuickBooks screen so that you are able to see a step-by-step on how to go about it. Okay, so I'm starting, of course, from the homepage, which you are now familiar with by now. Now, most people, when they use QuickBooks, they tend to use this mostly for just the cash sales, okay? And I'm going to start with that on the side for sales. I'm going to start with the cash sales, okay? Because that's pretty straightforward. And then we're going to go through the rest. Now, you use this icon when a customer has bought something and paid at the same time, which means it is not an invoice. You're not raising an invoice, okay? And I've seen some places when I've gone to someone's QuickBooks and this icon is not there, it's because it was not activated at the time of setting up. So if you're not seeing it in your QuickBooks, it's because at the point of setting up, it was not activated. So when we're going to make a sales receipt. Now, to make a sales receipt, when you click on the icon, it brings you this window, okay? Of course, then you have to choose which person you're going to sell to. In this case, so it's the same logic as on the supplier side. If the customer exists, you can sell to them. So remember, we had initially set up Lillian as a job, okay? So we can make a sale to Lillian, but you can set up another customer, it's the same thing. Now, when you choose the person that you're selling to, then you also can choose which class that is going to be. If it's cars, is it whichever department that particular sale is going to be associated with. Then the next cell is undeposited funds. Now, you can choose that the money, if they pay directly to the bank, you can choose that the money goes directly to the bank, or it goes to undeposited funds to be deposited later. In this instance, I'm going to choose undeposited funds so that I can show you how to make deposits for payments that have been done, okay? So the date of the cash sale is 31st of December. And I am going to choose what is going to be paid, the payment method. I'm going to put a check. So if I put a check, okay, then I have to put a check number. And then I choose which item that I'm buying. So in this case, I want to just do a change of oil. I have to do a change of oil. If I do a change of oil, that is part of do it yourself oil change, okay? And I'm going to do a kit for change of oils is what I'm going to buy. And I'm going to buy one of them at that rate, okay? So once I buy that one, I'm going to save it. I'm going to save the purchase. That's as simple as that. If you want to add another item, you keep on adding other items. Maybe I wanted to buy something else, like what do I want to buy? I can say I want part sourcing, okay, complete care. Also, I buy one, and so I get another item. So you can keep on populating here until the full list of what the customer has bought is populated, okay? Under payment methods, you can choose whichever payment methods you want. But now, like, for example, in Uganda, we have people paying by mobile money as well. So you can add new and you choose the payment method that you want to add. You can say by mobile money. There is a payment method that we have in Uganda as well. And you choose mobile money is what kind of payment, okay? Is it a check? Is it American Express? Is it online banking? Is it other? I'm going to choose other. Then I say, okay. So if you had chosen a check, this is where you put the check number. If it's mobile money, of course, you can put the reference number for mobile money on this particular slot. I had said I'm going to use a check, okay? So I'm going to use a check, and then I save and close. So that is how I make a cash sale, okay? Now I'm going to show you how to raise a quotation. I went to this particular client and they were having a lot of data that they could not collect. And in trying to find out what happened, why they have all those data that they can't collect, is because they did not have this icon here for raising quotations. So anybody who came and asked for a quotation, they were giving them invoices. So you can imagine every invoice therefore resulted to a sale and a data. So this is where you create purchase order, no, not purchase orders. This is where you create the quotations to your customers. When you click here to create QuickBooks calls it estimate quotation. So you choose who you want to give the quote to. I want to give the quote to someone called Edwin. Is in the system already. I'm going to give a quote to Edwin. And Edwin, I'm going to put the class is going to be under service. Okay. And it's a retail customer. The date is still that same date. And I'm going to choose under our service list. So your items and service lists are all in the same place, okay? So I'm going to put service, sorry. When I click on service, okay, it alerts me about the VAT code. When I put on service, the description is there, is repair service. And then how many repairs did I do? So did Edwin do? It's one. It is one. If there's if it is something that requires a markup, you can put a markup. If it doesn't require, so an example where you need a markup. So let's say you bought parts that you're going to fix in the car, and where you bought the part from, at the price at which you bought the part, you're going to add a markup so that you're selling to the customer with a markup. In this case, it's a service, so I'm going to add a markup on the service, okay? And I'm going to leave the price level to be that, okay? It's out of scope for VAT, or you can choose if it is vertible, you choose that. So if it is a part that also is being charged to them, assuming they are buying, which part can they buy? Let me look for a part. Okay, so assuming they're buying a window switch. Okay, now this window switch, you can say they're buying one, and in our system we had set up that when you sell a window switch, you put a markup of 28.09%. So which means therefore what we are billing the customer is $71.23. Okay, so then you save and you send the quote. If you want to, of course, print this quote, you can click here to preview the quote first before you print it. So it looks like that. You can preview how the quote looks like, okay? If you're happy with it, you can click print, or you can save it as a PDF, or you can email the quote, okay? So in this case, I'm going to save and close the quote. So going on with this same customer, Edwin. So assuming we sent the quote to Edwin and he's happy with the quote, I can come now and bill them. I'm going to bill Edwin for that quote. If they have accepted or there's anything they want to change. So the other quotes that were in the system for Edwin, so the previous one didn't go through, and there's this new one is the one that I want to focus on. And I'm going to choose okay. That's the quote that was in the system. And he's saying, this customer job you've selected has outstanding billable items, time, and costs. Okay, do you want to select the billable items so that you can add them to the invoice? Or do you want to exclude the billable items and cost You may add this later. So let me include them right now so that you can see that how that one is added. So it has all these other things that were outstanding. So there's a time of labor previously, there could be other expenses, there could be mileage, there could be all those different things. Now in this case, it looks like it's the time that was billable. And I could choose which time I want to bill. Okay, so I can choose one of the times and I say I want to bill that one. So what happens is on the invoice that we had the 2 items before, it adds here 2 hours of billable service that we need to bill Edwin. Okay. So now you see now from the estimate that we had, we are adding now another item that was supposed to be billed that we did not bill. Now, when you're making an invoice, another thing that you can be able to do, of course, defining where to ship the invoice and all those different things are set up at the time when you're adding that particular customer. But I've seen there are people who also want to track who is a sales rep, the person who attended to this particular customer, because maybe you want to track, what do you call it? You want to track commission for your sales representatives. So you can add your sales representative so that this is going to be assigned to that particular sales rep. Once that is done, you save and you close. Okay, yes. I want that to be the sales agent for that. So you've issued an estimate to Edwin, you've issued an invoice to them. Now we need to receive a payment from them. So you click on receive payments and then we look for Edwin in the system. Yes, there he is. And then, so Edwin has a bill that is outstanding for us. He might want to pay the entire bill or part of the bill, okay? So if I tick here, it comes and populates the entire bill, assumes it's paying the full amount. But assuming that he only wants to pay $200. If he wants to pay $200, what happens is it's going to assign $200 as a payment made, and it's going to leave a balance under payment in the system for that, okay? So I'm going to assume that he's going to pay $200. The mode of payment, you can put a check or cash, whichever works, or it's a direct debit, whatever option works. Then you put the details of the card details, if it's a direct debit. If it is cash, of course it is cash, yeah. So assume it is check, because that's what most people tend to do. You put, of course, here the check number. And then you choose which account it is going to go to. It can go directly to the bank, or it can go to undeposited funds to be deposited later. Okay, so let me assign undeposited funds, and I'll show you how to make deposits. If there's any other memo you want to put a particular reference, you can put a reference there. And then we save and close. Okay, so now we have cash sale that we made. Okay, we had a cash sale that we made. And then we also have payments that we have received. Now, both of these are going to be, we are going to do what? We are going to make deposit. We're going to make deposit of both of them. So when you come here to record deposit, it is going to show you all the things that are undeposited. Okay, it's going to show you all the things that are undeposited. So you have to tick the ones that you want to deposit, and this you can sort out by the type of transaction. These are cash sales, or the type of payments, or you can even sort by date or by name. Sort by date, it brings the order of transactions chronologically by date. Or it can be by amount. You want a particular amount to be sorted, so by the smallest to the biggest, or it can be sorted by the names as well, okay? Or by the payment method. So you say you want to deposit all the cash, or you want to deposit the checks, or you want to deposit the visas, or whatever it is, okay? So assuming we want to deposit the cash. Okay, so we pick those ones, those 2 cash sales, and it's coming to a total of $128. Now, some people don't take things to undeposited funds, which means then it's hard for you to go and see what has been deposited, what is still outstanding to be deposited. Then you have those conversations of why has this thing not been deposited for this long, okay? So if you have a policy of depositing cash by a particular date, then you'll check, okay, this cash has not been deposited and it was received on this particular date, or you have this payment that hasn't gone through. So putting them through undeposited funds helps you to, it's more like an internal control mechanism for you. So you can choose based on the deposits that you have, you can choose what you want to deposit. If you want to deposit all of them, it is fine. You can deposit all of them, but I'm just showing you that you can actually select what you want to deposit. And then you choose okay. When you choose okay, then you choose which bank do you want to make the deposit to. So you'll have different bank accounts that are listed here other than one. On that bank account, so it's going to list for you what you've chosen to deposit. And it has an option here for what? For the cash that you need to deposit. Now, why I chose cash to deposit, because I've gone to some businesses and you find people who make cash sales and they actually collect cash, especially people who use sales, people who go to the field and collect money and then come in and put the money, bring the money into the business. You find that the cash sales they're supposed to have submitted for banking is $128. But maybe they use some money for something. They had an emergency. I've seen mostly the challenge they have. Let's say people who use cars, salespeople who also drive. Say maybe they had a car puncture. What is it called? A flat tire, or they had a puncture or something like that. Then you find there's some cash that they did not bank. So you find that maybe they did not bank. $5 was not banked. So when you choose cash back, it means it shows the amount that you'll have been banked is 128, but what has been banked is 123. Okay. But then you have to put an explanation why this money was not banked. Okay. Why the money was not banked. Maybe it was cash used for what? For puncture repair or something like that. How do you write puncture? Oh goodness. Well, so now what happens is let me just put for a tire. Here you have to choose where does this cash back go to, okay? It takes you back to your chart of accounts where you have to choose where does this cash go back to. Now I've seen most people where the cash goes back to tends to be petty cash or cash at hand. Or if the money was spent by the employee and they need to account for it, they'll put it on the employee's account, okay? So let's assume the money went back so that it can be done what? It can be accounted for later. You can assign to the employee who took the money, who was given the money, and they have to account for it. So you have other current assets, and you assume that there's an employee staff advance. Staff advance, maybe staff advance for I've used Lillian a lot. Let me say for Peter. Staff advance for Peter. And you say, okay. So now this money goes to Peter's account until when they come and give proof of expenditure, and then you can retire and expend the money. Is that okay? And then you save and close. So now the money has gone where? Has been banked into the cash register. Okay, so that is how you get estimates, you give quotations, you receive invoices. When the customers accepted the quote or they just ask for an invoice, you can issue the invoice for them to pay later. Okay, and then you receive payments against the invoice. So I've seen some situations where someone raises an invoice, but instead of coming to receive payment against the invoice, they come and create a cash sale when the person is paying. When an invoice is created, okay, the customer account or accounts receivable is debited, and cash and the sales account or income account is credited. When a cash sale is raised, the bank or cash or wherever that money sits is debited, and then the income account is credited. Which means if you received an invoice and then you come and make a cash sale, it will never clear that invoice. So you'll have a situation where you have a receivable that is never being retired, is never being cleared. Okay. So remember, the arrows are very helpful. So when you create an invoice, you come and receive payment against that particular invoice. Okay. So both the receipts against invoices and the cash sales that you have received, you take them to deposited funds. You take them to a deposit. When you deposit, it now goes where? To your cash register or your cash book, as QuickBooks calls it. So all the payments, all the receipts that have gone through are deposited into your bank account. Okay. So that is the session, module 6, on how to receive post revenues, okay, and how to make deposit. So we can post other transactions, and then once we've now posted all the different transactions, the next thing is to be able to see, is it accurate? The transaction that we posted, was there accuracy in this transaction that we posted? And of course, that leads us to what? Bank reconciliation. And that one is going to be the next module, module 7. We're going to look at bank reconciliation to see, did we post the transactions well? Can we reconcile them, our bank register, our cash book register with the bank register? Okay. So that is it for module 6. I'll see you in module 7. Thank you for watching this module.